37,000. That is how many Canadians filed for insolvency in just the first 3 months of 2026. The highest quarterly number since the 2009 financial crisis. Bank of Canada just made its fifth straight decision to hold rates exactly where they are. If you have a mortgage coming up for renewal, if you are already feeling the squeeze, or if you are thinking about buying in Calgary right now, this video is going to tell you exactly what is happening, what it means for your specific situation, and most importantly, what you need to do right now before things get worse. If this is your first time here, hit subscribe and tap the notification bell. I break down Calgary's real estate and mortgage market in plain language. No fluff, no spin, just the information you actually need to protect yourself. Depending on when you are watching this video, on June 10th, 2026, the Bank of Canada announced it is keeping its overnight policy rate at 2.25. This is the fifth conservative hold. They have not moved this rate since October 2025. Now, you might be thinking, great, at least it didn't go up. And I know a lot of people that are happy about that. I need you to understand that is not the whole story. Here is what Governor Tiff Macklem actually said. Raising rates to dampen inflation could further slow the economy. Easing rates to support growth increases the risk that higher inflation becomes persistent. Unquote. That is his quote. And how is that translated? They are stuck between two bad options, and that uncertainty is your problem right now. Here's where Canada actually stands right now. Canada has technically entered a recession. GDP contracted 2 quarters in a row. Inflation is at 2.8%, which is above the bank's 2% target, driven mostly by rising energy prices from the ongoing Middle East conflict. Unemployment is sitting at 6.6%, and those 37,000 insolvency filings I mentioned, that is 17 Canadians filing every single hour. The bank is not cutting rates because inflation is real. The bank is not raising rates because the economy is fragile. So they are holding, and Canadians are caught in the middle. My name is Conrad Aglah. I'm a licensed realtor and a licensed mortgage broker here in Calgary, Alberta. I have been in this market for almost 20 years. I've been through the 2008 crash, the 2015 oil collapse, the COVID shock, and the rate hiking cycle that started in 2022. And here is my age. I can look at your real estate situation and your mortgage situation at the same time in the same conversation. It makes things very easier, straightforward for people, which is very rare. And right now, it matters more than ever. Let me walk you through exactly what you need to know. Approximately 1 million Canadian households are renewing their mortgages in 2026. Many of you locked in at 1% or 2% back in 2020 or 2021. You are now renewing at 3 to 4 times that rate. Let me make that real. If your mortgage was $400,000 at 1.8%, your payment was around $1,650 per month. At today's rate, you could be looking at $2,400 to $2,600 per month. That is $1,000 more every single month. For most Calgary families, that is the difference between comfortable and a crisis. So what do you do, especially if your mortgage is coming for renewal? These are the strategies, or this is the strategy you want to adopt. 1, start your renewal process 90 to 120 days early. Do not wait for your lender to contact you. Number 2, do not automatically sign your lender's renewal offer. They will often give you their worst rate first. Number 3, compare fixed versus variable, but I'll break that down in a separate video this week because it's own conversation. Number 4, talk to a mortgage broker, not just a banker, a broker. We have access to dozens of lenders, not just one, and hundreds of options. So we are able to discuss and position you properly. Now, here is something almost nobody is talking about. If you have a variable rate mortgage with fixed payments, meaning your payment doesn't change when rates move, your mortgage contract may contain something called a trigger clause. And here is what that means. If rates rise far enough that your regular payment no longer covers the interest, your lender can force you to immediately increase your payment, make a lump sum payment, or convert to a fixed rate without your consent. Right now, without warning. The good news, rates are holding, so this risk is paused. But the bank has explicitly flagged that a rate hike is possible if inflation keeps rising. What you need to do today, pull out your mortgage contract, look for the words trigger clause or trigger rate. This is we are talking about people with fixed variable rate payment if you have a variable mortgage. If you don't understand what you are reading, call me or your broker. And now do that now before anything changes. I want to speak directly to someone right now. If you are already struggling, if you are behind on payments, if you are using credit cards to cover your mortgage, if you are scared to open the mail, first be assured that you are not alone. 37,000 Canadians filed insolvency this quarter. These are real people, good people who got caught in a rate environment they could not predict. Second, the worst thing you can do is nothing. Here is what the data tells us. Approximately 80% of insolvency filings in Canada are consumer proposals, not bankruptcy. A consumer proposal means you negotiate to repay a portion of your debt over up to 5 years. You keep your home, you keep your car, and you stopped the bleeding. If you are in any of these situations right now, what you are supposed to do, step one, call your lender before you miss a payment. Ask specifically about the hardship program, payment deferrals, interest-only periods, amortization extensions. They don't always advertise this. You have to ask to get to know that they have this. Step number two, prioritize your mortgage above everything else. Your credit card can wait. Your mortgage cannot. I've seen a lot of people making these mistakes. Step number three, consult a licensed insolvency trustee, LIT. These are federally regulated professionals. Initial consultations are usually free. They have a legal obligation to give you unbiased advice. Step four, don't go to a debt settlement company first. Many of them will charge you thousands of dollars for services an LIT provides for free. And step five, build a 1 to 2 month emergency buffer. Even a small cushion changes the psychology of stress. Very, very important. Now, let me give you the quick hit list. That is things that will make your situation worse right now that you want to be cautious about. Do not pull equity from your home to pay unsecured debt unless you have a clear plan and have talked to a professional. Do not lock into a 5-year fixed rate right now without running the numbers on what happens if rates drop in 2027 or 2028. Do not ignore renewal letters. Your lender is counting on you doing nothing and then they will come after you. Do not buy a home right now based on what you qualified for 12 months ago. Requalify with current rates and get current numbers. And honestly, if you are not sure whether your numbers still work, that is exactly what I'm here for. The link in the description connects you directly to my calendar. No sales pitch, no pressure, just a real conversation about your real situation. Don't wait until it's too late before you start looking for a solution. And here is where working with me is different right now. Most agents will talk to you about real estate. Most mortgage brokers will talk to you about financing. For those of us who are licensed in both and do both, and we do it well, in this environment where what you can borrow directly affects what you can buy and where your real estate equity is your financial safety net. Having one person who sees the complete picture is not just convenient, it is a strategic advantage that protects you. The Bank of Canada held rate that sounds stable, but the economy is weak. Inflation is above target, and 1 million Canadians are about to renew their mortgages at rates they have never paid before. The window to prepare is right now, not when the renewal letter arrives, not when you miss a payment. Now, here's what to do next. 1. If you are renewing in the next 120 days, click the link below. Let's run your numbers today. 2, if you are in financial distress, send me a message. Everything stays confidential. I have 20 years of experience navigating exactly this. And 3, if you are thinking about buying in Calgary in 2026, watch my next video. Going live this week where I break down the fixed versus variable decision in detail for this exact economic climate. Subscribe so you don't miss it. Drop your questions below. I read and reply to every single one. I am Conrad Aglah, your Calgary Realtor and mortgage broker, and I will see you in the next video. Until next time, have a beautiful day. Bye.